Everybody, this is Jim at SP500chart.com. It is a little after 7 o'clock on the East Coast, but I just drove down from Vancouver, British Columbia to Seattle and checked into my hotel. The good news is I got a pretty good uplink speed, so the upstream is not a problem. So we're going to do a video, and once again, the market just shows us that it does not want to go down. But I want to get you to consider something here, because you'll know that I mentioned in the weekend review video is that the market is not going down, but it's also not really going up that much. If you look at it, even though today was in the Dow at least the highest close in the last 3 years. When we look at the S&P, we see that it really hasn't gone up that much in the past 2 weeks. And as a matter of fact, it appears that the S&P is just kind of going sideways to slightly up. Now, I tell you, when you look at technical chart patterns in the markets, you pretty quickly come to understand that when there has been, oh, by the way, before we get into this, I got to remind you that I'm not a financial professional. I'm just a guy that draws lines on charts. All of this is just for educational purposes. You have to decide what to do with your money based upon your own observations and your own due diligence and research. So this is just my ideas based upon some charting methods using trend lines and pattern analysis. And you can see I've really kind of boogered this chart up pretty good here with some very short-term lines. And I think maybe a goal of mine before we get to the end of the week video this week will be to clean this chart up a bit, make it a little simpler to understand. So that's going to be one of my goals. Now, I just remind you that where we are right now does not really come as any great shock. But what's happening is the S&P just keeps upward pressure. So if we have a trend line that's broken, it's like the S&P says, hell, I'm going to go touch that line again, and then I'm going to fall back down, and then I'm going to head back and I'm going to give that line another go. And what we had today, you remember we had identified this line that I just highlighted as being the neckline to this kind of strange shaped, but a pattern that worked like a head and shoulders. It was a very small one, and when the S&P got down to about 1380, whatever it was, 1388, let's call it, that pattern played out the way we would expect it to. But then the S&P got back over this neckline, broke down it for a second time underneath it, and today it powered right on up exactly. I want to say exactly, yeah, right, like exactly to that line. Now, we have to ask ourselves a question, and the question is this: does the market do this on its own, regardless of charts, regardless of what we might say about the markets? In other words, is this chart that we're looking at right now dependable because human psychology in market situations is dependable? Or are a bunch of people looking at this chart and they're going, you know, if it backtests this line, I'll sell? You know, there's probably a little bit of both. It's funny because people have said that whenever technical analysis becomes, quote, a sure thing, it will stop working. But it seems to me that that if there are a lot of people waiting for that move back to that line, then when it makes it, they're aware of it, thinking technical analysis is going to work, so they sell. So I'm not quite sure why it is that if technical analysis works, the more people who catch on to it, the less it will work. That really, there's an intuitive sense of me that says, yeah, maybe that's true, but there's another part that says in a logical sense, it really seems that the more technical analysis is viewed as reliable, the more it would work, because more people would see the patterns, and the patterns then would become even more predictable because people would put in orders to trigger right at these lines. Okay? I think that actually happens, by the way. When you look at how some of these trend lines, when you get in a down market, when you watch a neckline break, it's as if all hell breaks loose. It's like someone just knocked over, it's almost like a dam just let the water, the dam failed and the water comes pouring over it. But anyway, enough of that. What I want to say is that for the past, roughly 3-point-something weeks, the S&P has been in a period of relative volatility relative to what we were going through last summer and last fall. No, not that volatile. But when we look at where we've come from and the kind of move that we made over the past weeks and months, what we're getting now, you see, we had this steady climb, one little correction here, then more steady climb, then another correction, then there was a pretty strong climb right here, and now we're just kind of getting a little bit of whipsaw around. And we have to ask ourselves, where does this volatility usually occur in a market? Well, oftentimes it occurs when the market is sorting out its direction. So you get one move down like we had back in early March, and then the market just says, wait a minute, okay, that's enough selling for now. Now we're going to go up, okay? And then you get another move down. This time you say, it's going to rally back a bit, but I'm thinking maybe this might be a good spot to sell, because I heard that SP 500 chart guy say that this market could be pulling back to the 1320 or 1330s, or you know what I'm saying. So people start to get indecisive, and people start to sell the little rallies, because we rally up, we sell, we rally up, we sell. Now we've rallied back up. Guys, if this is any pattern, I would expect we're going to sell again, and I expect that we will find support. Probably we should look to this line right here to see if this holds as support. And that would be a line right around 1396. Again, the good news is if you're long in this market, and we now have a line that is not parallel, it is not straight across the chart. What's the word I'm looking for? It's not just a completely horizontal line, but it is horizontal enough to where if this line breaks, then a back test to this line does not mean you missed much of anything. Okay? When this line broke and we came down, had it back tested, well, it would have, by now, it would have to back test up around, what, 1480, okay, or 1500 even. And I'm not thinking that's going to happen. Hey, wouldn't that be a kick in the head? Instead, what it looks like to me is that the market is now going sideways with a slightly upwards bias. And typically that slightly upwards bias is not really a good thing. If we had gone up and now we had traded down in a pattern like what we have here with these blue lines, okay, which we did for about a week, that usually brings about a nice result in the terms of this being a bull flag. But now that we have a larger pattern here with two tops and for sure two bottoms, I don't know whether I would count this little touch over here in on the 13th of March or not, but we have clearly two bottoms and two tops. Now we get to see, is this a third top? And then the question becomes, will this end up being possibly a little triple top pattern Or will this end up being some kind of a bullish pattern that is just so bullish it won't slant down? You know what I mean? It's like every now and then you will get a bull flag that instead of going slightly down or horizontal actually does have a little bit of an upwards slant to it. But I'm not convinced in this case. So what I think we need to look at, and what I'm going to keep in mind for now, is this line down here that is right now in the mid 1390s and rises slightly, but not at a great clip. So with the strength in this market, you can't ignore that. And I know that that I said back in the latter or the middle part of March that if this red line breaks, that might be a good sell signal. Well, it did break, and I guess if you sold there, you really you have missed out on a big 10-point move. But just the same, the market appears to say after this sell signal was hit, the S&P is not ready to roll over quite yet. So anyway, that's kind of it for today, and I would say watch this line right here. If that goes, I think that's a pretty clear slightly rising support line. If that were to get taken out, then that should produce a downward move in the S&P equal to the height of this pattern. And if we measure the height of it, we find that it is roughly 32 points high. So if we were to get a down day or two, and this ended up, oh, excuse me, I was measuring off the wrong line. It's still 32 points, but if we were to break this, then I would say that we'd be looking again at something around the high 1360s as a minimum downside target if this line breaks right here. So guys, again, some surprising strength. I keep waiting for this market to pull back a little bit. I'm waiting for it to come down, to work some sellers out of the market. The more it gets extended like this, the least likely I will to be a potential buyer. Matter of fact, at this point, I'm not a buyer. I'm holding some things, but I'm not a buyer at these levels. I'll be a buyer if we get a nice correction and if we come down to an expected level of support and then start to show signs of the market moving up. If we look at a 5-minute chart, you can see that I had mentioned the possibility of this being a little inverse head and shoulders, and so we also have this short-term line right here that may produce a bounce. And a matter of fact, it looks like it may have at the very end of the day. Let's just keep our eyes on that, see if that happens. If so, and if this is going to act as an inverse head and shoulders pattern, then there may be a little bit more steam left in this move to get as high as the 1430s. But hey, let's just keep an eye on it. And like I said, I'm not interested in taking out any new positions right now. And some of my positions today on an up day were in pullback. So look, that's it for the day. Thanks for watching. And thanks for being a subscriber if you are. If you're not, hey, that's all right. I hope you still get something out of this.